Now it's time for charting futures. Here's Abigail Doolittle. And Abigail, well, stocks, doing precisely nothing, it feels like, at the moment. But there's a decent sell-off for commodities.
Yes, Caroline, you're right on both points. Stocks are basically just schluffing around, even though they do have all-time highs. But we have a bit of a sell-off for the commodity complex. Let's take a look at that on the day. Here we have the Bloomberg Commodity Index, as you can see, down about 1%. The big drag there, crude oil down 6 out of the last 7 sessions, perhaps on the inventory situation, worries about the global economy, plus the Saudi Aramco details of that deal valuation not coming out where some investors, traders would like it. Gold futures about flat, up slightly. All of this as the Bloomberg Dollar Index is down. Typically, a down dollar would help the commodities. So let's take a look at a longer-term chart of the dollar index to see what this could say about commodities going forward. This is a more than 1-year chart. We see a very nice uptrend as shown by the 200-day moving average rising in yellow. That tells you the buyers are in control. We also have this rising uptrend, very steady consolidation up and down within this trend. More recently, we've had a test of the bottom of the trend channel. We also have had a test of that 200-day moving average. It appears as though another test could be on the way to that 200-day moving average. But net, this chart, unless we see a big move below the recent lows, we're likely to see the dollar index go back toward 100, maybe even higher. It'll be interesting to see whether or not that happens. If that were to happen, it would probably be pretty bearish for commodities. Tom Thornton of Hedge Fund Telemetry, thank you so much for joining us as always. And what do you think about that chart? Do you think that uptrend will hold, or are we about to see a break to the downside?
I think we could see the dollar come back down to the dollar index to 96.
Okay, so that would break that trend.
Yeah, right now.
And that would actually be bullish for commodities. So not surprisingly, your chart of gold is somewhat bullish. So let's take a look at your chart of the gold futures here.
Okay, well, I was here in August, and I said, look, I think gold and rates will back off a little, some of the risk off assets. And we have seen a back off in gold. I thought we were going to get to 1400, 1450 is where we got. But this
$100 per troy ounce, that's a pretty good call on your part.
It worked out. But what I think is really important right now is the MACD was very, very overbought. And now you can see it's oversold. It's starting to turn up with the histogram. And I think it's really bullish if you like gold that you didn't have that much price depreciation, but you have a fully oversold momentum indicator. And seasonality for gold in December is quite good.
So your bias is somewhat bullish on gold. Let's talk about your options trade, because we're always trying to educate our viewers on the flexibility around futures, but there's actually options that you can trade on gold futures, and this is how you would do it for your bullish idea.
Right, so I like call spreads on gold, and I like the January 1520 to 1570 call spread. Okay. You're gonna pay $5.25. It expires the day after Christmas, and hopefully you get a very nice Christmas present with this trade. Volatility for gold is very cheap, so that is very good. And I like this risk reward scenario. It's about an 8.5 times return if it goes through the full strike price, and that's only a 6% move.